Good evening, it's Quant Trade Edge. This is a special nighttime edition because I see something happening in real time. Just wanted to call it out, so in case you're watching it, you have the guidance around it. This is the daily gold chart. Overall, I think it's very bullish. A few days ago, we found the Forex type trade on this down move here. And I said that I thought it would be very unlikely we take out this low because this low would indicate a 2B pattern. And I don't think that gold is going to fail here. But it is still very possible to put in a little bit of a triangle here, which, would give us some more down room to, say, 1970s. And along that vein, you'll know from the Forex trade, we don't predict anything. We just see when daily bar directions change. And here, we had a higher high, higher low. So this is in an uptrend. In fact, I can put the GAN indicators back on. And you'll see we had a down leg, an up leg. And now we've taken out yesterday's low. So that is technically a down leg. And of course, that'll get negated. Excuse me. That'll get negated if we have an outside bar. An outside bar stops us on all of our trades. That's just, I think statistically they happen less than 10% of the time. But, so that's always a possibility. But really, this red line represents yesterday's, the prior day's low. Maybe something like a 15-minute time frame gives us a little bit of perspective here. The opening bar on Globex took out yesterday's low. And we are now inside of a rectangle, basically a Hoagie inside of that bar. So as we know on a Hoagie, none of this stuff really matters, but we did change directions. So here's oftentimes what happens inside of a Hoagie. So, I don't like counting the direction inside of a Hoagie, but the one exception is there are many times where you get an A, B, C, and this C will barely tick above that Hoagie. It may stop just short of it, or it may kind of leave a trap there, and then bang, you get your move. So that looks like what's happening here. The two ways you can do it. One is to just say this entire Hoagie is your pattern. Therefore, if you break below that Hoagie using this stop, which is pretty wide, it's about $11. That would be the traditional way. But if you've been paying attention to some of these Hoagie patterns that set up, there is an ABC within the Hoagie that tends to kind of trap at the end. So I would, be willing to take a short towards the top end of that tail and maybe just give it a couple of bucks to the upside, $3-4 to the upside as kind of a stopping power, or wait until you tick that and then wait for the trend to change back down. That's probably the safest way to do it. That way you'll have an actual risk bar to risk against. And that way you're getting a much better entry than waiting for an $11 Hoagie to break. So just wanted to put that out there. This large bar with the ABC within the Hoagie is something I've seen a lot in natural gas. It just looks like it's setting up here in gold. So I thought I'd point it out. Have a good evening.